Hello, Oracles. Today I want to share with you guys my top 5 BDCs and REITs. Now, again, none of this is financial advice. I'm not suggesting you buy, sell, or hold any of these. I'm just sharing with you what I have in my portfolio so that you guys can do your own due diligence and research and see if it is right for your portfolio. Just like I did with the ETFs, down in the description below, I do have a link to every single website for all 5 of these so that you guys can go look at them for yourself and again do your own due diligence and research. So today I'll break down for you guys the top 5, and again, like I did last time, I'll give you a brief overview of what each one of them does, and then I'll show you guys the charts as far as how it compares to the S&P 500, why I have invested in them, and what their dividend history is. So we'll get into all that in just a minute, and if you guys like this kind of content, please hit that like button down below, subscribe to the channel, and if you guys like learning about dividends and investing, please hit that like button down below and subscribe. All right, so number 5 on my list is Prologis. And Prologis is a REIT that invests in real estate for the AI movement, storage space for AI, supply chains, all sorts of different things that they are going to be investing in when it comes to real estate to help the future grow from here when it comes to AI and technology. And now if we look at the total return for Prologis over the last 5 years, it does underperform the S&P 500. However, if you look at 2022 here, we look at the spikes that it did, well outperforming the S&P 500. Now, we do know that during that time frame, we went through a strong bear market, especially in the NASDAQ. So seeing this much beaten down here, and now the reason that the NASDAQ was so beaten down was because the interest rates were starting to go up. Well, typically when that happens, REITs also suffer. You'll see that in the other 2 REITs on this list. But Prologis outperformed and went up. This is because it was excited about the AI movement. And so when it comes to Prologis itself, it actually is not like many REITs. It actually does have significant price appreciation. And here we saw that price appreciation significantly. It doesn't pay out a huge dividend, at least not yet. But we can see that because of the excitement around AI, it kept it above the S&P 500. Now, of course, it came back down to reality and has over the long term underperformed. However, if you believe that AI and technology are here to stay, Prologis is most likely going to be growing significantly more. Are they going to outperform the S&P 500? Don't know. We will have to wait and see as time goes on. But for me, this is a play that is not so much about the price appreciation, but the dividends that's going to be paying out over time. And looking at their dividend yield, it's not very high. You're looking at about a 3% dividend yield when it comes to Prologis, which as far as REITs go, is relatively low. However, we are going to be looking at their dividend history. And looking at their dividend history here, you can see that, yes, during the last housing market crisis, they did crash down. They are a REIT, so they did cut their dividend entirely and then brought it back. But since then, they have been going up on their dividend every single year. So bringing this all the way up to here, that dividend growth is significant. This last time around was about 10.3% that they went up on their dividend. So again, if you think AI is the next massive movement we are going to be seeing when it comes to technology, Prologis is the company that you are going to want to be in when it comes to REITs. Next up on the list is VICI Properties. Now, they invest in real estate on the Las Vegas Strip. So you can say that it's not a hugely diversified portfolio, but it is more on the high end, and we have been seeing lately that the Las Vegas Strip has been booming. Las Vegas is a very much an up-and-coming city yet again. They've got the Sphere going on over there. Many sports teams are looking to move their franchises over there. The Raiders have already gone there. The Athletics are looking to move over there as well. So again, Las Vegas is reinventing itself and becoming that place to be where everyone wants to go. So this is why, for me, VICI is one of those companies that I want to invest in, because I do believe that Las Vegas, just looking around the country, investing in real estate myself, you look at places that are hotbeds for growth. Las Vegas is a hotbed for growth. This bodes very well for VICI Properties. And now when we compare VICI Properties to the S&P 500 as a total return over the last 5 years, it's relatively close. VICI Properties is only behind by about 8% over that total time when it comes to total return. So again, REITs don't really do much when it comes to price appreciation, but man, they have been doing extremely well, keeping up with the S&P 500. And as you can see here, even when the S&P 500 was getting beat down in 2022, VICI started to outperform. And for pretty much all of 2023, VICI was outperforming the S&P 500. Now that we are getting the rate cuts coming in officially, we are going to be seeing this running back up again, as we can see here. You know, back in July, we had that signs that, yep, we are going to be seeing rates getting cut. Sure enough, VICI property taking off again. And now the dividend yield for VICI properties is around 5%. So again, pretty healthy for a REIT. And again, when you're looking at high yield interest rates for a lot of savings accounts, that 5% is starting to dip down. I know I'm only getting 4.5% now on SoFi. So seeing something like this where I can get a higher return than that is a place that I want to start putting my money. And now VICI property has only been paying out dividends for the last 5 years, but they have consistently gone up on their dividend every single year. And this last time around is no different. And now they only went up a very small amount here in September by about 2.3%. But it is still growth when it comes to their dividend. And again, you see that price appreciation as well to keep up with the S&P 500. That is going to make a huge difference. Now, the only concern I have when it comes to VICI properties is, yes, I do think that Vegas is going to be a huge booming city going forward, but it is a lot of consolidation and it is not very diversified over there. So it's one of those things that I really like the company. I really like what they're going to be doing as far as REITs go. And I'm going to keep it in there, but I'm just going to keep my eye on it to make sure that nothing goes awry. Because God forbid something happens and Vegas all of a sudden becomes a place that nobody wants to be. If VICI hasn't moved themselves to diversify better than they already are, then it might be a place of concern. But as of right now, things are looking very good for them, so I'm going to continue investing in them. Number 3 on my list is Ares Capital, ticker symbol ARCC. So Ares Capital is a BDC, that is a business development company, and what they do is, as they say here, they're delivering comprehensive financing solutions to the middle market. So where these smaller to medium-sized businesses need to get loans and can't get them from banks, this is where BDCs come in. So yes, during the great financial crisis, during times of a recession, could be difficult for them. We will take a look at their dividend history and see how the great financial crisis affected them. But these are companies who do pay out high yields. And again, you may not get a lot of price appreciation out of them, but you're in this for the income. And that is why a lot of people invest in BDCs. And now looking at the 5-year chart, comparing total returns to the S&P 500, very similar to VICI properties, down by about 8% under the S&P 500. So with the COVID crash and all the businesses being closed down, ARCC underperformed. But it has since caught up during 2022. It stayed about even. And then from there, it has just been climbing up steadily with the S&P 500. And now, as I said, looking at a dividend yield around 9% for Ares Capital, this is why a lot of people invest in BDCs. So you are looking at 9%. So again, when I'm looking at that high yield savings account of 4.5%, I can double that. When it comes to just the yield I'm going to be getting from Ares Capital, that doesn't even include the price appreciation. And now we look at the dividend history. So we see a couple of spikes here, and it seems like from out front here that it's a little bit inconsistent, but you see a bunch of these spikes here, and a bunch of these spikes are just one-time special dividend payouts. So those special dividend payouts can be taken out, but looks like they did have a cut here when it comes from 2009, that one cut here going from 42 cents down to 35. But since then, they have been up, up, up ever since then. And even with this chart here where it looks like it got cut here for COVID, it did not. Because if we scroll down here, we can see that in 2019, they basically paid an extra 2-cent special dividend every single quarter. So they still maintained their regular dividend going through the whole entire COVID crash. They just didn't pay out that special dividend. But as you can see here in 2022, they started paying those special dividends back out again. So, of course, higher interest rate environments are good for BDCs because that means that they're going to be getting more money returned to them based upon the rates that were out there. So rate cuts aren't going to be as good for them. However, rate cuts will improve the payback ratio that they get because the companies that they're loaning their money to will have an easier time paying all of that money back. And with Ares Capital, they did go up on their dividend here at the end of 2022. And at that time, that hike was 11.6%. Number 2 on the list is Realty Income, the monthly dividend company. That is literally what they have called themselves, is the monthly dividend company. Now, Realty Income is a retail real estate company. And as they show here in their portfolio snapshot, they have 15,450 commercial properties with a 98.8% portfolio occupancy. This number you want to see very, very high because this means that all of the properties that they own are generating income for them. And again, their diversification, they have over 1,500 clients. And now some of their client list does give me a little pause for concern. 7-Eleven, I think, is going to be fine, but they've got Walgreens as well. They've got Chipotle, who has been on fire, but lately hasn't been so hot. They've got Tractor Supply, who I think is great, Lowe's, Home Depot. So their client list is diversified enough where, despite the fact that a few of their top clients are kind of questionable when it comes to their business models and their longevity, I think that Realty Income is going to be good enough over time to be able to diversify themselves away from that and avoid any sort of negative impact that those companies might have on them. And now Realty Income is a significant underperformer when it comes to the S&P 500 comparison on a total return basis over the last 5 years. Realty Income only returning 3.4% versus that 94% when it comes to the S&P 500. So for me, this is why I thought that it was a great time to buy Realty Income, because buy when others are fearful, and this stock has been beaten down, buy low. So it has been beaten down, and I do think that it will be able to recover. And even if it does not, the dividend payouts are very consistent, and this is the reason why I actually own Realty Income. Again, I'm not looking at this for price appreciation. I'm looking at this for an income source. And so the yield itself is around 5%, and then looking at the dividend history over time, they have never, ever cut their dividend. Even going through the great financial crisis, never cut their dividend. They actually increased it going through the great financial crisis. Even going forward to COVID, they still never cut their dividend. They still continued to increase their dividend going through COVID. So when I'm looking forward here, if I do think we are going to get into a recession that is very similar to the great financial crisis, I feel confident that their dividend is going to be safe and continue to grow during that time. And again, you look back at the great financial crisis and their stock and all stocks got destroyed. So that means that the yield you would have gotten on this was significantly higher. So you would have been buying increasing income on a massive discount. If we end up getting that again, that is a potential. Will it play out again? I don't know. I don't know if we're going to get a recession. I don't know if Realty Income is going to get through this and continue to increase their dividends. But if history does repeat itself, that is what could play out, and I want to be ready for that. And finally, number one on my list is Main Street Capital Corporation. They are a BDC as well, ticker symbol MAIN, Main. These guys here are like the unicorn of BDCs. You're going to get price appreciation, you're going to get great dividend growth, you're going to get great dividend yield, and you're going to get special dividends on a regular basis. It is absolutely amazing what this company does. And again, they're just like the other BDCs. They're loaning out money to those small and medium-sized businesses so that they can grow their businesses as well. And so looking at Main as compared to the S&P 500, Main over the last 5 years returning about 80% versus again that S&P 500 almost 95%. So again, underperforming. But again, BDCs aren't really there for the price appreciation. It's a nice added bonus, but I'm really in it for the income. And so looking at the yield on this, you're looking at about 7.5 to 8% yield when it comes to Main. And then the dividend history over time, again, consistently growing, even since the great financial crisis, consistently growing their dividend. And what I love about Main is they pay out monthly. So you are getting a dividend every single month when it comes to Main, and they're putting out special dividends regularly. Here you go. Special dividend, 28 cents. Special dividend, 28 cents. Another special dividend, 30 cents. Special dividend, 30 cents. This is coming almost every single quarter of an extra 30 cents on top of the 25 cents they already pay every single month as it is. So again, the reason this is my number one is because they continue to grow their dividends despite any sort of negativity going on in the market. They still continue to pay out their dividends. They still grow them. And then when they have good times going, they pay out these special dividends on a regular basis. So the yield is actually higher than what it shows normally because you're constantly getting all of those special dividends. And because they pay out on a monthly basis, it allows your returns to compound even faster over time because of the fact that they pay out monthly. So there it is. There are my top 5 BDCs and REITs. Again, to recap here, number 5 was Prologis, PLD. Number 4 is VICI Properties, ticker symbol VICI. Number 3 is Ares Capital, ticker symbol ARCC. Number 2 is going to be Realty Income, ticker symbol O. And number 1 is Main Street Capital, ticker symbol MAIN, or Main. So again, you guys can let me know your thoughts in the comments below. Do you guys own any of these yourselves? If you do, what is your reason for being in them? Do you do it for income? Do you do it for stock price appreciation? Are you looking to stay in them long term? Let me know your thoughts in the comments below. Thank you guys so much for watching. I appreciate all of your support. Have a great one.